Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data, not necessarily here in the United States, but across the pond. We had German industrial production come in lower than expected at negative 1.3, was expected negative 0.2. We also had French industrial production come in at negative 0.3, was expected a positive 0.6. And we also had the Italian industrial production come out at zero versus an expected 0.3 to the positive side. We also had wholesale inventories here in the United States, which came in at 0.1 versus an expected 0.2. Wholesale inventories is a little bit hard to discern, only because it doesn't really show the consumer demand necessarily. It really kind of shows that manufacturers are lowering inventories. Well, does that mean they're producing and they're not building inventories and they're just getting rid of old stock? Or is there really demand picking up? It's really hard to say either way. So it's not something I really look at because it could go either way. We also had Dudley speaking, who's an FOMC member. And basically all he said was that he wasn't really upset or he wasn't really jolted by the jobs number we saw last Friday. But having said that, he was less inclined to raise interest rates anytime soon. Anyway, so that is what really is causing the overall markets, I believe, to push higher. After yesterday's big sell-off in crude oil, as you can see here, it's up $1 on the day. It's just wanting to stay. It's really getting comfortable right here within this $45 a barrel area. Onto the NASDAQ, like I said, this Dudley speech and him talking about not raising rates is probably the catalyst for the most part, which is driving the NASDAQ much higher today, up almost 40 points, as you can see here, just slightly off of the highs of the day. E-mini S&Ps, again, pushing higher, really strong today, up 17 points on the day. As you can see here, as soon as the market opened, the overall market has almost had no downticks for the most part, other than a couple of long covering areas, but just off of the highs that we've made for the day, as you can see. Onto a couple things that I'm looking at. These are the earnings trades. We have Macy's. If you remember, quite a couple of months ago, I did an earnings setup trade with Macy's. I've covered all of that. Those were a profit, but basically they were calendarized spreads for the different earnings setups. So we were kind of looking at earnings season coming up and selling either a call or a put to finance that call or a put in further duration wrapped around that earnings trade. So it doesn't really help right now, but going forward, that's a good one to watch because we're kind of coming to the back end of earnings season for the most part. So it would be a good time to go and revisit that. So you can go to protraderstrategies.com and sign up for that. With Macy's, I'm going to be looking at probably shorting this. I just think the overall retail sector has not been doing very well. We saw it with Limited Brands and a couple other ones, and Macy's has been struggling as of lately. So I'm going to be looking to short Macy's for that earnings. One thing, follow me on Twitter at Wolfman's blog. I try and tweet out all of my earnings trades because those are the ones that I do late in the day. If you've ever watched my webinar on earnings trades and how I set those up, I like to set those up at the end of the day within the last, right around that last hour or 2 hours in the day, just because then you get a real clean number as to what the market maker move is going to be to the upside or to the downside. So I like to wrap it around that right at the end of the day. So you can find that at protraderstrategies.com. Also, EA Sports is another one I'm going to be looking to go short on with this earnings. They've beaten earnings the last couple of times and still sold off. So I'm going to go with the, if they even beat, they're probably not going to break above this resistance area here. So I'm going to be looking to short that one as well. Disney, I'm going to be looking to go long on this one. So the reason why is everybody I talked to said over spring break that there was a lot of people there that didn't deter anyone from going to Disney, even though they started this new program where in the high seasons or when they are expecting the most amount of people, they are actually raising their rates for their tickets. So, and in the lulls, they're going to be lowering their tickets to try and generate some more people going there. And that's a new concept for them. So in that regard, I think that they've done very well with that program, and I'm going to be looking to go long on Disney for that one there. Now to XOP. XOP, as you can see here, is pushing higher. And I have a couple of trades that I put on around XOP, and this was for a couple of different webinars that we did. We did one on the straddles and we did one on the strangles. And for the one that we did on the strangle, I had on the May 28.5, 36 strangle. And I originally sold it for 77 cents. Now I've legged out of this completely now, and on April the 27th, I think it was, I took off the May 28.5 puts, which I originally sold as a part of that package. But to break it down, I originally sold that one strike for 37 cents, was able to buy that for 4 cents. And that was on the 27th, which was when we were quite a bit higher on the in the market. So that one was basically worthless. I looked at it like, if the market comes back down, all that can really do is hurt me. And for 4 cents, it just really wasn't worth holding on to that one. Then today, I took off the other part of that strangle and took off the May 36 calls, which originally part of that package sold for 40 cents, bought it back for 16 cents. Could have done it for, I think, 11 cents yesterday, but at the end of the day, when I saw the market starting to move back higher, that's when I covered it. I still have on my May 35 straddle in there, so I originally sold that for $3.10, so that one is still doing well, and if we get a bit of a pushback right up there, I think I got about 10 days to go for it to get right up there and nail that number at 35. That would be max profit. I'm likely not going to take it that far. I usually look to take about 30% of what I sold that for, so I'm looking to collect about $1.10 for that total, and I think I'm at around 60 some cents right now, so keep your eyes out for that one. Friday's webinar is going to be on, we're going to build on what we did the last 2 weeks. We did long call spreads and long put spreads. Now we're going to go into ratioed put spreads for this week, and the following week we're going to be doing ratioed call spreads. And the reason why we're doing that is when you add a little bit of risk to those strategies, you increase your probability of profit, and anytime you add more risk, you increase your reward. So we're going to be able to show a way where we can do this put spread and still make money if we are directionally wrong on that, and further our break evens than we would have with the just long call spread and long put spread. So go to protraderstrategies.com, sign up for that one. It should be a really good one. We've got a lot of people signed up for it, and it's a really great back and forth because I love getting your guys' questions so that I can answer them and go through it in real time how we would build this out. All right, so if you can't take that, take it easy.